Haley Tomazik with JF Meyer Realty, and today I'm joined by a very special guest, Chris Gianino with USA Mortgage. Welcome, Chris.
Thank you.
Chris is here today to shed some light on a great new loan product being offered by his company. Before I give away too many details, I'll let Chris give a quick overview of this loan.
All right, thanks, Haley. The loan that we were talking about is a one-time construction to permanent close construction loan. So it's a loan that has combined the lot purchase, construction financing, and permanent financing into one convenient package, and it's an FHA program. In today's environment with purchase loans and construction loans, it's been very difficult to get financing on the conventional side because in a lot of cases they're going to require 20 to 30% down payment. You're also going to need a certain amount of reserves, typically about 6 months of reserves, and credit score requirements are also increasing. I mean, at least the 720 and in some cases higher. And even when all those things are in place, it's still very difficult to actually find a lender that would be able to do that type of financing on a construction loan on a one-time close. So what this FHA program does is it allows, that helps a lot of different people in the transaction, but what it allows is it allows the buyer to do those things in one closing, like I was mentioning. And it really has four main benefits for an actual buyer. The first thing is it has very low down payment requirements because it's just like an FHA loan. So 3.5% down is all that's required in this type of loan. That speaks for itself. I mean, to be able to get a construction loan for 3.5% in this environment, it's pretty good. Also, as far as credit scores are concerned, you can go down to a 640 credit score just like any other FHA loan. Also, it reduces different costs and frustrations. As we mentioned before, you have 3 different closings taking place in the past, which would be for the lot, for the construction, and then for the permanent financing. So you have 3 different sets of closing costs in many situations and a much longer, extensive process. With this, it's just one set of closing costs. It really simplifies the process, eliminates a lot of cost, and alleviates a lot of frustrations involved. Deferred payments are also a key benefit. The builder has up to 130 days to complete the financing of this, complete the construction of this loan. So the borrower and the buyer, they don't have to make a payment until the construction period is over and they're already in the house enjoying the house. So that's nice. And the other thing is there's no surprises as far as the interest rate is concerned, because in a lot of cases in the past, the construction period went through and then your loan closed, and you had to kind of make sure that your interest rates were the same at the beginning of the process as they were at the end of the process. So you weren't quite sure on what your payment's going to be, and it could vary in some cases drastically, in some cases not so much. But here there's none of that guesswork. It takes all that out of it. Your interest rate is locked. We put it on a 150-day lock, and we do it right at the time of closing, and we close before the construction period begins. So there's no guesswork in that.
Wow, that sounds like a lot of benefits for the buyer. Who else benefits from this loan besides the buyer?
Pretty much any party associated with this type of transaction is going to be able to reap some of the benefits. For example, the builder is able to expand their potential and free up lines of credit that wouldn't otherwise be free because this financing is going to take place before the construction period begins. Also, buyer fallout is eliminated. It becomes a thing of the past. And the reason is because when this loan closes, that homeowner owns that house, and there's no, especially in this type of environment where guidelines are being tightened up and whatnot, they don't have to worry about any fallout because of tightened restrictions throughout that process. It's already closed, the loan's done, so now it's just a matter of the builder having 130 days to complete the house, which they will because they go through a very extensive process to become an approved builder, and it ends up being a very smooth transaction for everybody. It also puts some builders back in the game that wouldn't otherwise have been because of their because maybe they didn't have the resources to get started up like that. So it brings some people back in the game. It really helps the whole market in general. The other party, which is realtors, that will benefit from this is what they like about it is it basically helps move some of their land listings and puts it in a whole new segment of people that maybe want to build on that land. They also, if somebody does own land and wants to build and use this product, And I mentioned earlier that you could get in one of these programs with 3.5% down. Well, in some situations, if a buyer already owns the land, they can use the equity in the land as a portion of their down payment or all of their down payment, and that allowing the buyer to get into this house and use this construction loan with literally zero money out of pocket. They can use the equity that they have in their land. And then realtors, they get paid at closing on this. They get paid their commissions at closing. So on a traditional and typical construction loan where they would get paid a commission at the end of the construction process, which is a long drawn out process, and a lot of realtors, in some situations, maybe it's not as desirable as another listing because of that reason. Well, in this case, that's not the case. It's when the application process goes through, then underwriting, then the loan closes, then the realtor gets their commission before the construction process even begins. So I think the buyer, the builder, the realtor, and I benefit from this because there's not many lenders offering this type of a product. It's a very unique product, and especially in Missouri, and I think we're the first ones to roll it out. So it's, I think we definitely are actually, because there's only one builder that's approved on that list, and I think we'll talk about that in a minute.
Great. Sounds like a lot of people benefit from it. What about the buyers? What typical criteria do they need to qualify for this loan?
Okay, well, part of the beauty of this product is it's an FHA loan. So when you think about the criteria and the guidelines, you just think of FHA guidelines. So it's going to be, in this case, a 640 minimum credit score, 3.5% down payment. There is no reserve requirements for this loan. It's still a great loan. You're still going to get great borrowers. It's borrowers that may not fit into that conventional box. I mean, we do loans, regular mortgage loans with borrowers that have 720 plus credit scores, and we do them in an FHA program. Same thing would apply here. So anything on an FHA loan would apply in this situation. Okay,
great. What is the maximum loan limit for this in Missouri?
In Missouri, it's $281,250. So $281,250 is the max loan limit on this loan. Same thing as any other FHA loan in Missouri. It might vary from county to county, but for the most part, generally speaking, it's going to be $281,250.
Okay, great. And so if someone wanted to purchase a house that was $300,000, would they be able to use this loan still?
Yeah, it's a great question. Yeah, those type of buyers are absolutely, and it does happen. It's just a matter of they're going to have to put a little bit more down payment down to bring the loan down to that max limit of Missouri, which is $281,250. So in this case, they may have to put down like 10%, but it's going to beat the alternative, which is going to be 20 or 30% when it comes to a conventional loan with this type of program.
Definitely. Now, speaking of the builders, can anyone build a home through this program?
The builder does have to be approved. That's through us. It's a very easy process. If you have any questions about it, just contact us. But it's not a new program. The program has been in existence for several years across the United States, but it is new to Missouri. So it's a proven product. It does work. It is a smooth transaction. It's just come to Missouri. Right now, there's only one approved builder in Missouri, which is quite exciting actually, and that's Rubicon Corporation. They're an outstanding builder. They are very reputable, and we did all the checks and balances with them, and they're on board and ready to make this product really take off in Missouri.
Well, great. That sounds really exciting. How about the interest rate? What type of interest rate can buyers expect to pay for this loan, and when can they lock it?
The interest rates are very competitive to a conventional loan or FHA loan now. The interest rates are locked in for a 150-day period, so they are going to be a little bit higher than what you would get on like a 30-day lock, obviously. And I looked at the interest rates today, and we'd be right at about 4.5% to 4.75% on a 30-year fixed.
Well, it sounds like a great product, and I am really excited about it. I guess my most important question for you is, if someone's watching this video and they're interested, where should they start?
The best place to start would just be by contacting me, and we could get an application started. Again, my name's Chris Gianino. I'm with USA Mortgage. My phone number to reach me at is 314-485-2745. That's my office number. And I could also be reached at, you can go to my website, just chrisgianino.com, and we'll have the information provided.